Hi and happy midsummer, folks. It's Dr. Jeff Camarda with a word from Jeff called, Has the New Bull Market Begun? Now, the press doesn't talk about it much, but we clearly experienced a bear market last year, beginning in mid-fall and bottoming right after Christmas, for which I call it the Christmas crash. During this period, the market dropped 19.8%. Close enough to the official bear benchmark of 20% for me and many others. Now, while we've since hit record highs, it's important to recognize that this looks more like the beginning of a new bull market than an extension of the old one begun in 2009, as many pundits and others in the popular press seem to prefer. But this is an important distinction. When we look at how far the market can go, frothy markets, as this column had observed for a long time through 2018, frothy markets tend to end in bear markets as investors recalibrate and values and attitudes adjust. But we think that happened last year, that we're not continuing with this old and tired bull as much of the press seems to believe. We also think it's a very good sign that investors, both professional and not, seem to have become much more pessimistic on the market's prospects and have trimmed exposure to stocks, even though we've recently hit record highs, pulling back even though the market trend seems to be firmly up. Some surveys are showing that institutional investors have not been as bearish since the darkest days of the Great Recession. This tends to be a very bullish sign, and I think it's particularly noteworthy that even in the wake of a stalled but warming, now getting quite warm actually, China deal and the new threats from Iran, see an upcoming video for my thoughts on that, that the market has hit new records. I think it's particularly noteworthy that we've hit new records even when we recognize the China deal is far from done, and the uranium-tipped sabers in the Middle East are rattling yet anew. As mentioned for a while this year, that I've been kind of harping on it, I think that 2019 will be a good year for stocks, both U.S. and foreign stocks. I think 2019 is going to be a very good year indeed. When a China deal happens, as it must happen, the market will likely explode. Until then, it seems to be doing just fine, climbing the proverbial wall of worry. As Buffett has famously and repeatedly said, the time to be fearful is when others are greedy, and the time to be greedy is when others are fearful. The fear gauge is up, and we expect the stock market will be too. We suggest you feel greedy now and appreciative of the gains that we anticipate as the balance of the year unfolds. And again, happy midsummer. Till next time, thanks so much for watching. This is Jeff Camarda.